This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
A container ship blocking the Suez Canal like a beached whale may take weeks to free, the salvage company said, as officials stopped all ships entering the channel on Thursday in a new setback for global trade. The 400 meters, 430 yard, Ever Given, almost as long as the Empire State Building is high, is blocking transit in both directions through one of the world's busiest shipping channels for oil and grain and other trade linking Asia and Europe. The Suez Canal Authority, SCA, said 8 tugs were working to move the vessel, which got stuck diagonally across the single-lane southern stretch of the canal on Tuesday morning amid high winds and a dust storm.
Russia's economy ministry will soon propose that the government impose a restrictive export tax on sunflower seeds from July 1 and a formula-based export tax on sunflower oil from September 1, the minister said on Thursday. Russia has imposed several export taxes for grain, sunseeds among other measures since December in its battle to tame rising food inflation amid the coronavirus pandemic. Details about the size of both taxes will be disclosed on Friday, Maxim Reshetnikov told reporters.
Moving on to the top news in the energy sector.
Crude oil producers from Europe, Africa and the United States faced difficulties selling to Asia, especially China, as buyers took cheaper oil from storage while refinery maintenance has reduced demand, industry sources said on Thursday. Chinese independent refiners, which account for a fifth of the country's imports, have slowed imports in the second quarter because of refinery maintenance, strong Brent prices and a large influx of supplies, including Iranian oil, in first quarter. These buyers and others in Asia are lapping up cheap oil offered by traders under pressure to clear storage after Brent crude flipped into backwardation, with prices for prompt delivery higher than those for future months, traders said.
The transition towards green energy imperils oil-producing states that have lagged in diversifying their economies, United Kingdom-based risk consultancy Verisk Maplecroft warned in a report on Thursday. Algeria, Iraq and Nigeria will be among the first casualties of a slow-motion wave of political instability that will engulf an array of oil-producing countries over the next 3 to 20 years as the energy transition takes hold, it said. Other states facing the greatest risk include Angola, Gabon and Kazakhstan, it added. Next, we have the top news in metal markets. China plans to restrict its use of lead batteries in low-speed electric vehicles, EVs, from September this year in favor of lithium alternatives, according to a revised list of technical requirements for the sector. Low-speed EVs have not previously been regarded as vehicles that qualify for proper license plates in China, the world's largest automobile market, but regulators are drafting rules to recategorize them. For lead, the move will cast a shadow over the demand outlook. In the medium to longer term, analysts said in a note on Wednesday. Batteries are one of the main applications for the metal.
President Andrés Manuel López Obrador said on Wednesday the Mexican state is considering taking a bigger role in lithium production, arguing companies were using mining concessions for speculation rather than mining the metal. Speaking at a news conference alongside his Bolivian counterpart, Luis Arce, López Obrador was asked for his views about mining companies selling stakes in lithium projects in Mexico even as his government put a stop to new concessions. The question made particular note of an announcement in November that Chinese company Ganfeng Lithium Co. Limited would increase its stake in Bacanora Lithium Sonora project in Mexico from 22.5% to 50%.
We will now look at the top news in the agricultural sector.
Chicago soybean futures fell for the first time in 5 sessions on Thursday as a firm US dollar and weaker crude oil encouraged oilseed markets to consolidate after a recent rally. Wheat fell to a new 2021 low, pressured by favorable Northern Hemisphere harvest prospects. Corn edged lower as traders looked ahead to the U.S. Department of Agriculture's March 31 planting intentions and quarterly stocks reports for direction. The most active soybean futures on the Chicago Board of Trade were down 0.6% at $14.24 minus 3/4 a bushel by 12:09 GMT. That is all for today's news on commodity market. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.